The Consumer Financial Protection Bureau will soon have oversight of digital payment services, including Apple, PayPal, Venmo, and others. The new rule will impact payment services that handle at least $50 million in transactions annually. For the latest, I want to bring in CFPB Director Rohit Chopra. Thank you for joining us. Before we get into any of this, actually, here we are saying that you're going to have oversight of all of these things. But the question is, under a new Trump administration, what kind of oversight do you think that this unit is going to have over anything?
Well, big tech companies have been lurching more and more into financial services, offering really products and services to more and more of the country. And there's pretty strong consensus from across the board that those companies also need to hold up their end of the bargain, making sure that they're following privacy laws and anti-fraud laws and so much more. So we're seeing a lot happening both at the state and federal level on this. And I think this is something that is totally common sense given the realities of the market today.
No, I understand that. I'm just curious, as we talk about DOGE and efforts to undo all sorts of divisions and units inside the government, what you think happens to yours?
Well, I highly doubt that the CFPB is going to somehow fade away. I think everyone is seeing how much the issues that the CFPB is tackling are ones that directly relate to the costs that people face every day. We are looking hard at all sorts of proposals, including the president-elect's, to cap credit card interest rates. There's lots of people looking to reduce their costs on their monthly mortgage. So I don't know, Andrew. I think it feels like bread and butter of what any responsible government should be doing. So you think actually the division gets even more aggressive?
So how do you feel about capping credit cards, since you brought it up?
Well, we have actually put into place some stronger safeguards to end a lot of the credit card companies' abuses, including addressing late fee churning and so much more. I do think that we have seen credit card interest rates go up so high, much higher than we saw the Fed raising rates over the past few years. And people are now paying, I think, $120 billion in interest and fees. We have state level caps on so many types of loans. It still allows credit to flow. And I think that's going to be a place where you're going to see a lot more discussion about how both sides can really fix some of these credit card issues that people are struggling with.
When you think about regulating the tech companies, how is this going to change for them? So PayPal, Apple, what does it actually mean on a day-to-day basis in terms of what that regulation looks like?
Well, right now, they're already subject to law enforcement actions. But what we want to do is make sure that people actually are going to have access to their funds. When someone's account is frozen or suddenly closed or they're debanked, it's really harmful to them. We want to make sure that we can see how they are following the law so those problems don't occur. And look, right now, we are also seeing those tech companies ingest huge amounts of data about all of our transactions, but they got to follow our privacy laws. We also see huge amounts of fraud being trafficked through some of these payment apps. We want to take important steps to cut down on it. I don't think if they're following the law, they should be afraid at all.
How do you think about crypto in the context of all of this, as we've been watching Bitcoin hover near $100,000 now, and some of the issues that you're just describing?
Yeah, so it wasn't that long ago, it was, I think, 5 years ago, that Facebook announced that it wanted to create its own currency. You know, when I think about consumer payments, right now, we don't really see crypto being used for consumer payments, but a lot of us have our eyes on the future of stablecoins. Stablecoins could, if they take off, be part of big tech payment apps. And that's something we want to make sure that people actually are, able to have their money safely, and that it doesn't turn into something that fraud or hack makes them lose all their money. So we are not seeing that yet in the market. We see some of these firms looking at it, but I think that's where you're most likely to see it come into consumer use.
Final question for you, and it really has to do with security. And what I mean by that is digital security. When you look at the digital security programs, not just of the banks, obviously, but now of these type of institutions, whether it's an Apple or a PayPal or some of the other fintech companies, how do you rank them or in terms of thinking about the risk that something demonstrably problematic happens?
Yeah, so I do think it's fair to say that bigger companies have more resources to invest in security. The challenge is often resilience. I think I was on with you a few months ago when CrowdStrike, that debacle happened. We've got lots of issues in terms of how the economy is so dependent on a couple of these big tech companies when it comes to the cloud, and increasingly even in financial services. And one outage can create a real catastrophe. We really dodged a bullet with CrowdStrike, but I think we've got to be on the lookout when it comes to so much concentration, and one glitch can take the economy down sometimes.
Rohit, appreciate you joining us this morning. Thank you.
Thanks so much, Andrew.